Just a recap on where we left off. From the last session, we said if we are in an uptrend, right? If we are in an uptrend, the only way we can place our fib is from the bottom going up to the high, right? And if we're in a downtrend, and if we're in a downtrend and we are placing our fib, the only way we can place our fib is, since we are in a downtrend, we place it from the high to the low, or from the top going to the bottom, right? When we're placing a fib, we would want to wait for, when we're placing a fib, we would want to wait for a clear high and a clear low. And what do I mean by that? What I mean is, you cannot just come and see that you're in an uptrend and then all of a sudden you just place a fib, let's say like here. This is a clear low, but you need to wait for a clear high. You cannot assume that this area over here is a high, right? Why? Because you have to wait for your high to get confirmed, which I'll teach you in another lesson. But for now, let's wait and finish on this one. So what you find is, if you just place your fib anywhere you think that it's a high, it can drag you up, and then your fib placement becomes wrong. What does it mean? This means by the time it gives you a new high, let's say here, you would have already missed the right points to take your entries, meaning that instead of your trade buying in these areas, it can buy a bit above, right? And again, what we said about the fib, we said once we get a high, a clear high and a clear low, the first thing that we want to do is we want to come mark the high and the low, and this is going to be an area which separates our premium and our discount level. In as much as we can come and put a fib on this area, say like this, what you'd see is price will just come and tap in the discount level and go up. That's if we are in an uptrend. So as we get deeper with the fib, I would like to let you know that as much as we can get reactions on the 50 or on the 0.5, I prefer entries that come on the 0.618 and the 0.71. Now, some people, what they do is they have a 0.78% level. And I think you can see on my charts, I have a 0.78%. What this 0.78% simply does is it acts as a stop loss, right? To say, okay, I've reached my 70, but by the time I reach my 0.78, this is gonna be my stop loss area. But then sometimes the proper way we need to place a stop loss is just below the low. And below the low is where the 100% lies. Meaning that if the 100% is violated, that means the low has been broken. Meaning that we are now changing direction, going to a sell trend, right? So I want us to look at this, right? Whenever we reach a point of interest simply means a point, just a second. All right, sorry about that. So a point of interest, what it simply means is a point of interest is an area where we're expecting reactions to happen on our trade, right? So a point of interest might be an order block, a gap, areas on a Fibonacci, a support, or a resistance, right? So on our Fib, our points of interest for us to be buying are the 0.5, 0.618, and the 0.71. Someone might ask, which one is the most effective between the 3 points? And I think that's where we left off from our last session. Any of the 3 points is effective, right? They are as strong as, what another can be. But if they are strong as what another can be, the only thing that matters is market structure, which forces us to go back to the lesson of market structure. Now, if we are in H4, or let's say we're in day one, or H4, okay, let's say we're in H4, and we are in an uptrend. Remember, in H4, it just looks like a straight line. If we place a fib, say we've touched the low and we've touched the high, and we say, all right, just because we were told that if it touches the 50, it's supposed to buy. What you see is you can buy here, right? But then at the end of the day, it will drag you down maybe to the 0.618%. You can buy at the 0.618%, but what you see is it can drag you down at the 0.71%, right? So it's not always about saying that automatically as soon as it taps in these zones, you're supposed to start buying. Your job as a trader now is to say, all right, I am in H4. I want you to write this down. If you are in H4, I never taught you this. If you're in H4, you take entries in M15, right? Meaning that if this blue structure or if this blue line represents my H4, I have to zoom in that H4, right? And let's say red is now going to represent my M15. What you see in M15 is you're going to have market structure, like you're going to see highs, lows, highs, lows, highs, lows, highs, lows, highs, lows, a break of structure, high, low, right? When we get a break of structure, say at this area, it doesn't mean that we are going to be selling this for the long run. But it means the sale that is going to emulate from this is just a sale that's going to, remember, we have an impulse, a correction, an impulse, a correction, an impulse, a correction. So this sale is there to fulfill the correction, right? So let's start again together. Say we have a high, a low in M15 now, a high, a low, 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 a high, a break of structure, a high, a low, a high, a low, a high. Now, since we know that this structure in M15 is just there to fulfill this correction, what we now expect is at any of these points, we expect to see our market give us a break of structure, right? Soon as we get a break of structure, what this now tells us is, okay, this correction is now over. We're now going to have the continuation, which is a high, a low, 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 breaking the area of the previous high. So at the end of the day, what you're going to see in your H4 is your price is going to come, react, and then go up. But now, this shift of structure for this correction It can happen either on the zero point 0.5, on the 0.618, or on the 0.71. There's no particular point that we can say price can just come and automatically tap and then it goes up. What's important now is for us to wait for a break of structure. Right. So we can get a break of structure that comes at the zero point 0.5 and then go up. Or sometimes we can get a break of structure when price reaches the 0.618 and then it goes up. Or we can get a break of structure on the 0.71 and then it goes up. So what's important is to wait for a break of structure. Now, why is a break of structure relevant? This is what is going to be our confirmation. This is what's going to confirm that our trend is now truly reversing and then going up. So you would see that even if for the guys, I know with other guys who've traded on their own before, you would see that even if we want to use the rule of support and resistance, what you'd see is price just doesn't go down, right? At some point, let's say this was our resistance. At some point, if you really look at it deep, price moved with structure when it got to a resistance, and then it broke structure, and then it started going down. And to prove what I'm saying, we can go on the actual chart, and I'd want to show you something. Let's say a support or a resistance point. At the end of the day, I want you to know something, guys. We don't believe in support, neither do we believe in resistance. We believe in market structure. But I think you've seen the way that I've marked here. So let's go to smaller time frames. That's H1, right? I want you to see something. Since I'm on a daily chart, I'll go to H1 and I want you to see how price acted or reacted when we got to that support area. Right, I know this doesn't have anything to do with the Fibonacci, but this is good for clarity at the end of the day so that we know how trades react or reverse. So what you would see is we have a low, we have a high, and then another low, another high, another low, another high, another low, a high that failed to get broken. But what happens here? Look carefully, a break of structure, and from there a high, a low, a high, a low, a high, and now price is going up. If we move again to the left side, to the right side, sorry, what you'd see is when price approached our resistance point or the point that we call our resistance, what you see? I want you to look at this. We have a high, now a low. Now we have a high, now a low. Now we have a high that failed to break that one, now a low. Change of character, a high, now we are already switching, going up. And then what happens after that? What you'd see is straight away price started reversing and going up, right? So that's how trades reverse at the end of the day, right? They reverse with a breakout structure. That's the first thing that you have to look for to get that confirmation that, you know what, my breakout structure has happened. Now I'm buying or now I'm selling. I think this is V25. What you can pretty much simply see is when it's downtrend, we have a low, a high, a low, a high, a low, a high, a low. Now we want another high, a low. So what you can generally rule out from here is we are in the downtrend. Right. So if anyone has a question before I move forward, can you kindly ask? If anyone has a question before I move forward, can you kindly ask? Guys, please ask me questions, please. All right. Professor, I've unmuted you. You can ask, and I've lowered your hand.
Okay. Thank you, sir. So my question is, which one is the strongest for the retracement? Is it the 50 or the 61.8 or the 71.2? Which of these three is the
All right.
strongest?
All right. I'm not sure. I had talked about that, but let me repeat it because I had said it. Um, I'll repeat it in case you're not in the session. So let's say we have a high, a low, a high, right? Like this. What we would expect to do is put our fib here, right? Um, between these points, or between these 3 points of interest, the 50, the 0.618, and the 0.71, there is no one that is stronger than the other. But like I said, if you are seeing this, let's say we are seeing this from an H4 perspective, we cannot just come and buy when price taps the 0.50, neither buy when it taps the 0.618, nor buy again when it taps the 0.71. What we have to wait for is we have to wait for market structure. Since like I said, if you are doing your analysis, let's say in H4, then your entries must be in M15, right? So what does this mean? This means you have to zoom in your M15. M15 is going to have its own market structure, right? But what we want to be able to tell or see from that F15 is a shift of market structure, which is highs and lows, right? So like here, what I'll do is I'll switch to M15, and what I'll see is highs, lows, highs, lows, highs, lows, highs, lows, until it gives a break of structure. Now, since we know that we have an impulse, a correction for our trades to keep on going up, what we know is we are done with this impulse, but what's coming now is the correction, and the correction is supposed to be ending at around 0.5 or 0.618 or 0.71, right? So what we would wait for is market structure in smaller time frames, like say in M15, like I said. What we want to see is it's giving us highs and lows approaching either one of or 3 points of interest. Right. When price gets at the 50, what or at the 0.5, what we expect is we expect price to give us a break of structure. When it gives us a break of structure, it means it's now going up. But then if it doesn't, then it means it didn't confirm. So what do? We wait. Simply it will mean that it has to either come and react on the 0.618%. And from the 0.618%, what we expect again is to get a break of structure, right? If it gives us a break of structure, what does it mean? It means we are now going up. But it can fail again, and then it can choose to come and go to the 0.71%. When it comes to the 0.71%, what we need to see is a break of structure, and then when we know now that we are going to continue going up, which means that larger time frame, that H4 move is just gonna be this straight line that moves the trend going up. So there is no point that is stronger than the other. What matters is, did the point break structure? If the point broke structure, it means it's now confirming a reversal. A break of structure, why it's basically important here is it's important so that we know that we have a confirmation that you know what our point of interest is now playing, right? So amongst the 3 points, they are all 100% effective as much as each. But what matters is you waiting for a break of structure as your confirmation, which is what's going to tell you that a particular point is reacted. If the 0.5% gives you a break of structure, it means that's the one that price reacted on. If it didn't, and the 0.618% gives you the break of structure, it means that's the price way price reacted on. So it depends, right? I don't know if I answered you. Let me unmute you. I've unmuted you again. I don't know if I answered you.
Yeah, yes, you did.
All right.
My next question is this. You said if we're on H4, it means we'll go to H15, M15 to
Yes.
look at our structure. So, assuming it is H1, where do we check? M5?
All right. This is what I okay. Let me type this down for you so that you also put it on your notepad. You might want to write this down. So
Okay.
let me
Thank you.
just write this down. So when we do our analysis in let's say in H4, our entries they should be in M15. When we do our analysis in H1, right? Then our entries must be in M15 or M5 as well, right? Or M5. When we do our analysis in M30, our entries must be in M5. And when we do our analysis in M15, our entries must be in M1. So for
Okay.
M30,
I got it.
you might want to enter in M1 as well. But well, there's a there's a point that okay, there's a way that we treat M1, which as we go through the course, I'm also going to show you how to trade using M1. And the good part about using M1 is you always catch sniper entries. Even the booms and crashes, you always catch them in time. But anyways, in a nutshell, this is where you take your entries based on where you've done your analysis from. So now, what again this means is this is where most people get it wrong. Most people want to know how long to hold trades for. So if I do my analysis in H4 and then I take my entry in M15, sometimes what I'm looking for is if it's a good trade, I want to be holding that trade for at least 8 hours or 10 hours. And during that time, it should be giving me good profit. If I am in H1 and I'm taking my entries in M15, what I'll do is I would want to hold that trade for at least 3 hours or 4 hours. If I'm in M30, at least 2 hours, because remember, if I do my analysis in M30, I'm entering in M5. And if I do my analysis in M15, usually the maximum time that I hold a trade in M1 is 30 minutes to an hour. So, in case you didn't get that, remember, I'm recording this session. You can just simply replay and then listen to the time frames that I've given you as well. Um, do we have a question? Do we have a question? Right. So today we are going to do something that's very different. I'm going to give you homework and we must submit it by tomorrow, 7 p.m. Right. So this is the homework that I want us to get. Um, I want us to go and mark our points. I want us to go and mark our points. We want to use a fib, right? We want to use our discount and premium levels. We want to clearly show where we are expecting price to reach, right? And then turn around. We also want to mark previous at least three times on a chart, sorry, that price had reacted on a fib, the way that I've just been teaching you. So I want you to do this on these pairs that I'm gonna type down for you. I want us to do it on Boom 1000. I want us to do it on Step Index. I want us to do it on Crash 1000. No, let's do it on Crash 600. And I want us to do it on Volatility 50. Right. So these are the time frames that you are going to use. You are strictly going to use H4 and N15. Right. So that we train our eyes to master entries. So this is the homework that we need. And you can post it anytime in the group. I'll mark it for you. Please try to keep your charts as clean as possible. Because if you don't, then that means you'd have to redo it. So please, let's go. Let's do that homework. Thank you for attending this session today on a weekend, and let's have a great night.